I spoke with Hoffman at this week's Web 2.0 conference, and in light of the setting, I asked him if we've moved on to Web 3.0.
I don't know, and I'm trying not to play the naming game, but part of what I've been saying this year is that Web 3.0 would be built out of data. All the data that all of us create with our smartphones, social networking services, so forth, will create applications that will allow us to create better ways of navigating the world, and that is a strong candidate for something that could be called Web 3.0. I mean, that along with, of course, mobile, Android, iPhone, etc. But the basic idea is that because all of us as people are contributing that information, both explicitly and implicitly, the information in aggregate, when you begin to create applications out of it, those applications help us navigate our lives in better ways.
Now, as an investor, you have gotten in early to some of the hottest companies in the last 15 years, PayPal, Facebook, you built your own, yep. LinkedIn. To continue to do that, you have to see the future, or at least try to.
Or have people bring the future to me.
Okay, so what does the future look like to you?
So I think the future continues to be that we're just at the beginning of what happens with software services that connect everybody together. And I think obviously there's going to be a whole bunch of stuff on mobile. I think that the kind of different applications, like, people always speculate about, like, I'm going to open up my phone, it's going to tell me which restaurant to go to, or, all that kind of thing. I actually think usually the future is sooner and stranger than you think. So I think it'll be some kind of different kind of app that will do that. And part of the reason I gestured at data, because it was like, well, actually, what happens when you have lots of this data? So for example, at LinkedIn, we have this thing called LinkedIn Skills, which can show you, like, okay, which skills are trending, which regions are they, which companies are doing them. If I'm talent managing in the company, which skills should I be developing? If I'm job searching, which skills should I, like, if I'm interested in that skill, what are the other skills to learn? All of that was never available before in this true, real-time, distilled from everybody, but because we have all that data, we can build those kind of apps.
So if the last generation of hot companies were more consumer-facing companies, what's the next generation?
Well, I invest primarily in three things: platforms, networks, and marketplaces. And I continue to think those three will continue to be very strong trends. So as a marketplace investment that I made about a year ago, Airbnb, which is a marketplace for space, people essentially renting everything from a room to a castle. I think there's interesting stuff going on in payments, generally speaking because of mobile, but not only, which is a payment network, right? So networks can be networks of people, but they can also be other kinds of networks as well. And then the fact that platforms can create entire ecosystems of value is fun.
Now, file storage service Dropbox just raised a massive round of funding, $250 million. Greylock was a big part of that. We've seen other VCs like Kleiner Perkins invest, later stage in companies like Twitter and Groupon. Why are we seeing more traditional venture capitalists investing at later stages? Well,
so I think what you're seeing among the great firms is going all stages. They're not just doing later stages. They're going, we're creating a practice. Like at Greylock, we're creating a practice of investing in software. And it's software either in a $50K investment or software at a $100 million investment. And it's because we are all founders. We've been product people. We know how to play the technology strategy game at all levels. And so at any level, we could become a useful ally. And if we think the company is a market-defining company that is going to change the way that people share files, a la Dropbox, et cetera, those are investments we'll make whenever the right time to make them is.
Looking at Dropbox in particular, there are a lot of competitors out there, whether or not they do it as good as Dropbox. There's iCloud. There are companies saying they're willing to give storage away for free. How much does that concern you?
Well, competition should always concern you. Andy Grove, Only the Paranoid Survive, is a very good quotation. Dropbox has accomplished amazing things both in the user interface and in the difficult technical thing on the back end for essentially kind of all the integrations. And because we think part of the mobility changing, where you actually have mobile connected to the cloud, the ability to do transference of files across all these different devices is more urgent than others. So the one that actually gets to the scale, which Dropbox clearly has, is going to have a dominant effect on the ecosystem. And so therefore, I would say paranoid, but not worried.
Why were so many VCs willing to invest in Dropbox without getting a board seat? This is a company that only has 3 board seats, and 2 of them are founders.
Well, part of it is you only, as a venture firm, you only do a board seat when you acquire a certain percentage, right? Because you can only do a certain number of board seats. Now, we are, Drew's great, and I think Drew's awesome, and so, part of investing is I'll sit down with Drew and work on product strategy and talk to him about various things, because working with him will be a huge amount of fun. The general reason when they don't do board seats is they say, well, either the company doesn't need it, or the percentage is small enough, or maybe you're looking for an alternative board member who's specific to the company, specific to the zone of field. But that's the general evolution of practice. And Dropbox is also in its growth curve, right? So unlike an early stage company where you're trying to find the oil well, right? Dropbox is heading to the moon. Is
Drew Houston, the CEO of Dropbox, is he pioneering a new era of founder control? I mean, you're a founder yourself. Yes. You have a lot of voting power at LinkedIn. How much control is healthy?
Personally, I think that founders who hold a long-term vision, who care about the mission of the company, who will invent, it's very important to keep them engaged as long as possible. I mean, it's one of the things, for example, the perfect case study is Steve Jobs coming back to Apple. It's like, okay, Steve out, languishes, Steve comes back, I'm willing to take a big risk, I have this big vision in the future, and I create this massive return. Now, obviously not everything works out that way. But what you need to have is you need to have management, or the people directing the strategy, who go, I believe in the mission, I believe in the future, I have a vision that I'm working to, and making those plays extremely important, which is the reason why founders are really important.
In the second part of my exclusive interview with chairman and co-founder Reid Hoffman, I ask him what he's learned from going public.
I don't know if I have a deep stack of lessons learned. I'd say it's almost like a small thing. One of the things that's challenging is because you have a strict regimen of what information you say publicly. I used to be able to just say whatever I thought was the right thing to say to tell people, and now I have to constantly say, okay, is that a part of our public statement or not? And so it means that I speak a little bit more in generalities, I speak a little bit more in vision, because even though I know, what our, for example, current user number is, and I actually, in this case, I know, 120 million is what we've currently announced, right? I can only say the things that are part of the public announcement, and that part of it is different.
Since LinkedIn debuted, we've seen a lot of market volatility. Do you have concerns about companies making exits now? Is there such a thing as an IPO window, or should a good company be able to go out whenever?
I think a good company that is long-term focused can go out whenever. Frequently the investment and the valuations are lower when the market's more challenging, and sometimes people aren't willing to do it for that reason. And also it's frequently a better marketing event when you go out into a bull market, right? Because it helps the company more in terms of doing that. Now, that being said, part of the whole challenge of when you're in a turbulent market, which we've had small pieces of in the last couple months, the problem is it's open, closed, open, closed. Is it Tuesday? It's open. And that kind of reshifting of things then thrashes the process, which is operationally difficult.
Does Groupon count as one of those companies that can go out whenever?
I personally think so, but of course, since I'm an investor and they're in the registration period, there's not very much I can say.
Well, there's been a lot of talk about companies like Groupon that have these massive valuations, or hope to have these massive valuations, and part of that is because of their potential to raise money on the public markets. Any concern that companies won't be able to raise money as was previously hoped because of the market environment? Well,
raising money from the public markets obviously have to get out. The private markets for software companies are extremely robust because software continues to be something that transforms productivity. There's a whole range of services that can be done on both the consumer and the enterprise side. And so there's a lot of good venture capital money for our software companies.
Talking about deal flow, you backed Michael Arrington's Crunch Fund.
Yep.
It's been just a few weeks, but have you seen the deal flow that you were hoping to see? You were one of the few investors who said publicly why you invested.
Yeah. Well, and I regretted it quite a little bit because Mike also has deal flow himself, right? Which is part of the deal flow that really matters. The principal thing, when we invest in a fund, which is very rare, it's because it's someone we have a relationship with that has a side of their network that is additive to our network, and therefore we start collaborating with them on those sorts of deals. And so Mike has actually pinged us on a couple of deals and said, hey, what do you think about those? Because one of the things you do as investors, you say, well, what do you think about the space? Do you think this company could work? And these sorts of things. And investing in this fund is a natural way of saying, look, we're friendly, we're going to be working together. Okay,
lastly, I just want to ask you about Steve Jobs. Do you think there will be another Steve Jobs, or at least another, leader, innovator, inspirer, who can kind of step into his shoes?
So I'm an entrepreneur, which means I'm an optimist about the future. So my short answer is yes. When is an interesting question. I mean, I always would hope for sooner and more. Like I'd hope for 2 next year, right? That sort of thing as a way of doing it. But that's not to undercut how much of a genius he was at creating entire industries, entire platforms, and having an uncompromising sense of good product, not just good taste, but like this is a good product. And one of the lessons that Jobs does that I take to heart and Greylock takes to heart is like the best way to create great companies is great products.
Anyone out there who you think could become this?
Well, I think there are some great entrepreneurs out there that are doing pretty well thus far. I mean, Zuckerberg's doing pretty well. Jack Dorsey's doing pretty well. There are strong guys out there, and we'll see what the decades bring us.